Hey, good morning, everybody, and welcome to What's Hot on the Open. We're going to take a look at all of the action here on the U.S. markets live on MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Let's take a look at the market action. The jobs report, which is much anticipated not only here in the United States but globally, is out, and it reaffirmed the ADP number that we had earlier this week. Employment is hot. As a matter of fact, the non-farm payrolls came out well above expectations at around 243,000. We did have that average weekly wage number come out, up about 0.2%. So it's in line with expectations, but we're not seeing something that's through the roof, but it's positive. All right, I'm not going to paint a different picture than that. So the data really sets the table next week for the FOMC to say, hey, guess what? We're raising rates. And as a matter of fact, if you're going to take a look at a couple things, first of all, the Dow Jones trading up 50. Now, I would anticipate right now, and we're taking a look at the chart, this is a weekly chart on the Dow Jones. With the amount of data that we've had out domestically that's very positive, with the jobs report, the unemployment report, the wage, average weekly wage, I'd like to see the market challenge these highs of 2017. With the Dow Jones up 50, we're not seeing that right now. There's a little bit of a breather here, and I think that makes sense. Now we're starting to look not only at the economic data, but we're going to start looking at what are the other catalysts, because this market has gone far and fast. Technicians would call this overbought area. I'm looking at this as a rational, fundamental, technical, and I'm an options trader, and I'm saying we need to have a challenge or an area where a pullback would be healthy, especially if we can get into this area right around here at 20,000. You're going to hear everybody talking about 21,000 after the job report on the Dow Jones, but we need to get some sort of catalyst other than the data that's really kind of already been priced in. Taking a look at the S&P 500, we're seeing that that's up about 0.3% right now, 8 points at 2372.90. Again, nice trajectory, but on a weekly basis, trying to get up where it opened earlier this week, still hasn't gotten to that point. So we're still off of the highs for the week, but again, positive, especially after the action that we saw yesterday. Taking a look at the NASDAQ, you're seeing the NASDAQ trading at 5383.20, up 19. And again, this is firmly in the green, and tech has been really strong this week. Tech has been the silver lining, the strength in the market, and it continues. As a matter of fact, it's going to look like it's going to challenge its highs for the week and could be challenging its highs for 2017. Tech right now is the leader in the market. But what we really want to see leadership, especially after the action that we've seen, is in the small caps. This, as I have been saying all week, is the canary in the coal mine. The Russell 2000 for the week is trading on almost its worst levels. We're getting back into areas that we haven't seen since the beginning of 2017 and the end of 2016. This is where I get a little concerned. Why I get concerned? We've seen some great domestic numbers come out. That should be positive for U.S. stocks and specifically small caps, those small businesses. If you take a look at the daily chart, and again, this is just to give you a visual aid. If you take a look at the daily chart, there's some critical technical moments that have occurred. If you are a technician, these are basic. Broke the 20-day and the 50-day moving average. As a matter of fact, it's settled now one session, and it's going to fight to get over that 50-day moving average today, which is at 1371.15. It's currently trading at 1366 and 8 cents, up about $6 or 0.4%. This is going to be the challenge point. This is where the bulls are going to have to hold their ground. Otherwise, we're going to see some challenges in this area by the bears. And small caps, as I had said earlier, are what I call the canary in the coal mine. If we do not start to get more transparency and some more motion on tax reform, most notably tax reform, infrastructure plays, and then healthcare, and that's the way I'm looking at the landscape, I think that you're going to see some uncertainty start to come up. Now, where are you going to measure uncertainty? The VIX. As a matter of fact, if you type in and take a look at the VIX, right now, the VIX trading well off of its best levels. for the day. And as a matter of fact, let's just take a look at the weekly chart. You can see that the VIX is trading off of its lows at right around 1180. Again, the mark that we want to see challenged is going to be that $12, that 1250 level on volatility. That means that there's a little bit of a pickup. That means that maybe the indices are pulling back or getting prepared to pull back a little bit. Then you're going to see that 1416 level. If it gets above those levels, then uncertainty is now turning into potential trend shifts. We're going to watch that very closely, especially for those of you that have been sitting on the sideline, have been patient and disciplined on the most recent run-up, and you're looking to either build a new core long portfolio or add to your current portfolio. That is going to be a signal when you see volatility pop that you need to get ready to potentially add to those positions. And we'll talk more about that here at MarketStream.live. A couple other things that we want to take a look at is the bond markets. You currently are seeing that right now the bond markets, taking a look at the 10-year on a weekly basis, they're coming off of their lows. So you're seeing bond prices come up, yields are going to be pulling off. Let's watch and see if that actually starts to impact financials. The bonds were getting beat up pretty good yesterday. You see that the 30-year bond also up about right around 830 seconds right now. And so we're going to watch that one very closely. Again, there's been some damage done to the bonds as far as price action. Yields have been going up. That's been very positive, both domestically, and we've seen the global bond markets also pulling off and yields going up. That has been positive for financials, both domestically and globally. So we're going to keep an eye on this, see if this action starts to pick up, because bonds have been really beat up. That price action to the downside has not been expected. And again, we're going into the FOMC meeting next week on the 14th and 15th. That's going to start heating up the bond markets. We want to keep an eye on this very closely. All right, folks, that's it for What's Hot on the Open. We will be back this afternoon and we'll be taking a look at Tech Talk. We'll also bring a new strategy approach. I'm going to keep this one a little secret. You'll have to tune in at this afternoon, and then we'll close up with the closing bell. We'll see you here at MarketStream.live.